these inflationary forces, these debasement forces are at work. And so the question is then, is there something else that people can put their money in to protect themselves from these forces of inflation and monetary debasement?
Hi everyone, welcome into Pushing the Limits. Fantastic to have you with me. I am absolutely ecstatic to have someone that I've followed for a number of years, Cern Basher, with me. Welcome to the show, Cern. It's really neat to have you. I'm so pleased to actually get you on the show. Thanks for coming on.
Hi, Lisa. It is so good to be here, a fellow New Zealander. It's so great to see you, and I'm honored to be on your show.
No, it's going to be really exciting. So today, people, we're going to be talking about Bitcoin, and Cern and I have also got a second presentation lined up maybe in a week or two's time as well. That's going to be even more exciting stuff. But today, we're going to be talking about Bitcoin, crypto, a little bit about where the world's going, because it sort of frames this up. Now, Cern is a financial analyst. He has a investment advisory company, brilliant advice. So we're going to make sure that you hit all the links down below. He's very active on X, and make sure you go and check out all those links. So we'll get into that. But Cern, welcome to the show. And can you just give us a bit of a brief, background? I mean, we're both fellow runners and crazy adventure enthusiasts, and you were actually born over here in New Zealand, but you are now an international citizen of the world. Tell us a little bit of your background.
Sure. Yeah, I'm not sure that I'm quite the accomplished or maybe as crazy as you are in terms of endurance sports, but certainly that was a big part of my life for a long time. My family left New Zealand when I was 10 years old, and we moved to Canada. And that was actually a big awakening for me. I was very excited at age 10 to move to Canada for some reason. I'm not sure why, but it really sort of opened up my life, both in terms of academics and then also sports. And I became a runner. Had a lot of success in running in Canada. I was the Canadian junior cross country champion when I was 18 years old,
Wow.
and got to compete in the world championships and races in Switzerland and Japan and all over the place. And then I was able to get a scholarship, track and field scholarship to a U.S. school. And so that really sort of set off my running career. It was a great period of time. For me, it was about 11 or 12 years in terms of being focused on that.
Wow. That's
After
awesome.
college, I realized that running probably wasn't going to pay the bills.
No, I just worked that out much later in life.
So the good news was in college, I got a degree in finance. And I was also pursuing my chartered financial analyst designation, which is a global designation for people that analyze companies, investments. So that all worked out very well for me, and essentially moved to the US. I've been here now for over 30 years,
Mhm.
and I've been a financial advisor for about the same time. So
And
that's my life in a nutshell. Now I'm spending my time thinking about disruptive investments.
yeah, and we're going to do a really exciting presentation today about Bitcoin because that's one of them. And then also later on, just to tease it a little bit, you've got to come back for part two because we're going to be going to a deep dive into Tesla and the world of what's happening there. So that's going to be really exciting. And that's what I followed you mostly on for the last couple of years has been Tesla, what's happening at the company Tesla, and in your deep financial analysis of the company, which is absolutely mind-blowing. And you are one of the most incredible analysts that I've ever come across with breaking down what is the company doing and how are they doing it and where are they going. Not just, the Wall Street approach of, are you making money today? If the earnings calls down this quarter, you're out of here, sort of thing. Like you're much more able to see what's coming down the line, down the pipeline, and recognize early good investments for people. So, I'm really excited for that session as well. But today,
And
yeah, just to,
just to touch on that, Lisa, I think too that one of the important things I think for your listeners to realize is no matter what you think of Elon Musk, positive or negative, I think it is important to understand what he's trying to achieve,
mm.
whether you like him or not. And so I think that second show I think will be very interesting.
Yeah, I totally agree. It's so revolutionary what's happening in that and what Elon's doing that I think it's really important to understand it all and what the vision is because it's going to have a massive impact like you say, whether you like the man or not, have a look at what the companies are doing because it's going to be very, very powerful and influential. And I'm not a big fan of mainstream media, so anybody that's a ruffles the feather of mainstream media, I'm sort of like, there's probably something going on there that's good, not always, but that's sort of my contrarian approach anyway to life, after having many experiences. So you maybe like put your biases aside and actually listen to the thing. But today we're going to be talking Bitcoin because this is another thing that's absolutely also a much maligned topic. When I talk to friends who are not in the space today, they still go, "Oh, that's for criminals." I was talking to an investment banker recently, and he goes, "That's for criminals." And I'm like going, Larry Fink's in it, BlackRock's in it, all of the big banks are now coming on board. The rails are here, the governments are coming in, for goodness sake, like we've moved on from that scenario, have we not? But apparently
Well,
not.
it's interesting because criminals use cash as well.
Yes.
So, do we say that cash is for criminals? We should be because that's what they use. But there are other financial instruments that criminals like to use as well. Sure.
Exactly, but we'll just put it all in that basket, right? So
Yeah.
once again, so Shin, you've got a presentation here. So for those listening on the podcast, I do, recommend that you also go and have a look on the YouTube channel where you'll be able to see the actual graphs in the presentation, but we'll do our best to explain as we go along. So I'll leave it over to you, Shin, to start the presentation and kick us off.
That sounds good, Lisa. Yeah, I think so. What we'd like to accomplish today is to talk about Bitcoin. And now the funny thing is when you talk about Bitcoin, everybody has some preconceived notion about what it is at this point. It's been around long enough, and people either understand what it is or they think they understand what it is, and that may be positive or negative. What I'd like to do today is kind of start from some basics, talk about Bitcoin in also some ways I think that perhaps most people have not heard before. So that'll come a little bit later, but first of all, we kind of want to cover some of the ground rules here first. So the important thing to understand, and I found myself in the same camp here, is that this notion of everyone is against Bitcoin before they are for it, right? What do you mean that this is a new form of money? That doesn't make sense to me. I don't understand. I've grown up my whole life with the current forms of money. Why do we need a new form of money? How could this possibly be better? Some internet money. This sounds like a scam to me. All those things come to mind. I was there too at one point,
Yep.
right? And this is this next image here is a cover from Barron's magazine from I think May 1999.
Hmm.
And on the cover is an image of Jeff Bezos, his face inserted in an explosive device, and it says Amazon.bomb instead of Amazon.com. And the article was a very skeptical article about how silly it is to think that Amazon would be a new paradigm. And of course, now with the benefit of history, 25, 26 years later, we understand what Amazon has done to the retail world,
Yep.
particularly here in the US, but also globally in many, many countries. And so, again, this is another example of sort of being against it before you're for it, or perhaps not understanding the implications of something that's new.
Yeah, it's one for the history books, Amazon.bomb.
Yeah.
And now it's one of the
And
most powerful
certainly
companies.
that's right. Yeah. And in so many ways, and they continue to be very well positioned for this AI future as
Mm,
well.
yeah.
Um, Now, the thing about Bitcoin is that on this chart, or this image, it says Bitcoin is everything people don't know about computers combined with everything they don't understand about money.
Mm,
So talk about making it difficult to wrap your mind about Bitcoin because it's like nothing we've ever seen before in a couple of different domains. And most people don't give really any thought to money. Again, we were born into a monetary system, whether it's in the US or New Zealand or Canada or other countries, and we don't really even think about it. It just
no.
exists. Why do we give this any thought, right? So um, here are some of the reasons or the rationale people sort of give as to why Bitcoin is bad. So it's too good to be true is a common refrain. It's money used for criminals. You've already mentioned that one.
Yep.
Or there's no use case. It's too volatile. It's backed by nothing. the government will ban it, it will be obsolesced, or it will be hacked. And of course, the quantum computer risk, et cetera. Right.
Yeah.
So these are all similar things. And I bet for people that don't think too much about Bitcoin, these are probably some of the things that come to mind when they hear the word Bitcoin. Okay. So we can go into some of these, but before we do, I just like to tell you a little story here.
Yeah, this is
Now,
brilliant.
for New Zealanders, this may not be so strange, but when I talk to people in the United States about this, most people have not heard of this. So we've got two islands in the Pacific here. We've got the island of Yap and the island of Palau. Now, when I ask Americans about what's significant about the island of Yap, most people they can't come up with anything, right? But it's interesting because one of the things that is interesting about the island of Yap is they have what is now considered to be the predecessor to blockchain in their rhinestones.
They
And for
used
people,
massive stones as money with a big hole in it. So these are particular types of stones that these people, these villagers in this island used as money, as currency. So it was a story of currency.
that's right. And it's the first public ledger, right? So if you own one of these stones, it was too big to move. In this image here, this gentleman standing next to the stone, it's taller than he is,
Yeah.
right? And he could actually probably fit through the hole in the middle of the stone. It's such a massive stone. Now, they had to mine these stones from the island of Palau, which I think is a couple hundred kilometers away. And if you can imagine mining a stone like this and then putting it in a canoe and paddling back to the island of Yap, that would be a pretty risky journey.
Yeah. Proof of work.
Proof of work, right? They put in a lot of work to mine these stones. Now, there's actually a story of they were so close to home, one of the stones was lost at sea. They came back and they told everybody what had happened, and they still considered that stone to be money, even though they couldn't put it on the beach.
Yeah, interesting, eh?
Everybody knew where it was. That was good enough,
Wow.
right? They did 99% of the work in that case, and that was
So
good enough.
that's like it's like a public blockchain that everybody can see, everybody can read. It's immutable. It's there. So
Yeah.
therefore, this is the predecessor. That's brilliant. I love this story.
And what we mean by public blockchain is that these stones sat there on the beach. Everybody knew who owned which ones. And when there was a transaction, again, it was public. Everybody was aware that now somebody else owned the stone.
Wow.
And so that kind of transparency in money is not something that we have today. But this is something that we had in history, and this is something that Bitcoin in particular brings back again. Okay, so we have some examples in history of some of the features of Bitcoin. And not everything in Bitcoin is new. Basically, what we've done is built upon some of the best features of money that we've had in the past, and we're putting that now into the digital realm.
Yeah. So can you just tell us a few, what are those features that make money money? Because we always, like you say, born into this monetary world and we just think of, the government prints money and we have money and it used to be gold, but now it's not. But we don't think about what it is and what characteristics money must have to be a good money system.
Yeah, excellent question, Lisa, and we'll get to that in just a second.
Hmm.
Before I answer that question, let me just go over a couple other things with you, and then we'll get to that particular question. So, when we think of money, we think of each nation printing its own money. And so here is Venezuela with their own beautiful banknote, right? And a lot of countries have some very beautiful banknotes. They do make them very pretty. The United States is one exception, I think, in that regard. We have pretty boring money here. But over the last 30 years, the purchasing power of the Venezuelan currency has effectively fallen by 100%.
Wow.
So very unfortunate if you happen to be born in Venezuela,
Mm.
right? And we feel very sorry for those people that have experienced this, right? And it's forced the Venezuelan people to be very adaptable and be very creative to find ways around this. Okay. Another example is Brazil. My wife is from Brazil, and in her country over the last 30 years, the purchasing power of the currency has fallen by 99%. Again, beautiful money, but an unfortunate situation, right? So bad luck if you were born in Brazil.
Mm.
Now, let's bring it to a couple of Commonwealth countries, Canada and the UK. The Canadian dollar over the last 30 years has fallen, the purchasing power has fallen by about 65%. right? And it's very similar in the UK. And by the way, in New Zealand, it's also very similar. The numbers I saw was about 62% loss in purchasing power in the last 30 years. Okay.
So if you
Even,
had a hamburger in the 1970 or 1980 even, it was $1. It'd be sort of $3 now.
yeah. And it's even worse than that. And we'll get to the distinction between inflation and monetary debasement in a
Yeah.
second. Everybody understands about inflation, but very few people understand about debasement because the governments don't really talk about that. Um, so, again, this brings it to home. And for people in the US, they sort of say, oh, okay, that's interesting. Canadians and people in the UK lost 65%, and people in New Zealand, 65% of their purchasing power. That didn't happen to us. Well, that's false. Same thing happened in the United States over the last 30 years. We've essentially lost 65% of our purchasing power in the last over that period of time. So now suddenly that gets people's attention, right? What's going on here? Something has got to be horribly wrong if in 30 years we're losing 65% of the purchasing power. And so now we get to the distinction between inflation versus debasement. Our governments report to us what the rate of inflation is. We all know that those inflationary measures have their issues, right? And inflation is essentially the cost of living, right? The cost of everyday goods gets more and more expensive, right? And you can think of this as a direct tax on your cash and your wages, right? It erodes the ability to afford your life today,
Mm.
okay? If that's not bad enough, let's talk about debasement. Debasement, if you are a stock market investor, you can think of it as dilution. If you own stock in a company and the company issues a whole bunch more shares, your ownership in the company has now been diluted, right? Or just think about your favorite drink. If you put more water in that drink, you've suddenly diluted it.
Yeah, it doesn't
Exactly
taste so
the same
good.
thing is happening with money,
Mm.
right? And this is a much more subtle thief. It's essentially because governments are printing more and more money, your share of your country's GDP is being diluted. And another way to think about it is it's making it harder to get ahead tomorrow. So, for example, if you're a young person and you want to buy a house and housing prices are going up massively,
Mm.
that doesn't help you. It's making it harder for you to sort of buy a share of your future because the basement is causing the value of your currency to go down.
Yeah, so it's a really distinct difference between they're sort of like two sides of the same coin, but the action is different, the inflationary side and the
Yeah.
debasement side. And we don't, like you say, don't talk about the debasement. Yep.
And the reason this is so important, Lisa, is because the inflation numbers, and I'm showing you numbers here in the US, the inflation numbers tend to be lower
Yeah.
than the monetary inflation. The consumer inflation numbers are lower than the monetary inflation. And I've got a chart here that shows different returns on different investments. And most of them have returned more than the consumer price inflation numbers, at least the official ones.
Mhm.
But very few of them have been able to return anything near what the monetary inflation is actually.
Yeah,
So
this graph is one of the most important graphs I think I've ever seen to really just put it in a simple context. This is the inflation they're telling you about, but here's actually what's happening with the monetary inflation or the debasement. And that's the hurdle rate, basically, that you have to get over if you're going to preserve your wealth.
yeah, it's one thing to jump over a 3% hurdle, but in this chart, it's showing that the hurdle is more like 13%. And in the
Exactly.
US, this is from 2011 to 2024.
Mm.
So it's not the same 30-year time period we were just talking about, but still, the hurdle's a lot higher than most people realize. And a lot of people say, well, I would protect my wealth by investing in real estate, or I'll buy bonds, or I'll, invest in stocks. Well, maybe that wasn't good enough because unless you earned that 13% over this time period, you weren't keeping pace with the rate of dilution or debasement that was happening.
Yeah.
So yeah, that's a really, really important one to think about.
So there's
Now,
only really three things on this chart that actually either keep up with that monetary inflation, and that's the NASDAQ, the US growth stocks, or the SPY. Those are the only three.
The only three on this chart over this time period. Yes.
Yep. Yep.
Okay. Now I'm just going to skip ahead here a little bit. Um, so let's now talk about Bitcoin in the context of all this. So on the left, we've got US M2 money supply. The chart for New Zealand and every other country in the world looks very similar, just different numbers. Okay. And on the right, we've got an alternative, a growing alternative, and that's Bitcoin. We know that with Bitcoin, it's algorithmically programmed to cap out at 21 million Bitcoin. So we cannot have, just by the Bitcoin algorithm, we cannot have an ever increasing supply of Bitcoin. It's capped. And so
Yep.
right there, that makes it kind of appealing. But it's not just that. There's a whole bunch of other features that make Bitcoin very useful and very important. It's not just the fact that its supply is capped, but that it certainly is a major one.
We can't just print it at will and dilute your
Yeah,
share of the economy, per se, with
that's
Bitcoin.
right.
Yeah.
So normally what happens is when demand is high, the supply increases, right? So if you want, for example, more art or more real estate, they just make more. Or if precious metals become in demand, they just mine more. Or if stocks are in demand, companies then come to the market and they issue more stock, or existing companies. And if you want more debt, they just issue more debt, right? It's kind of supply and demand.
Hmm.
And now contrast that with Bitcoin. No matter what's happening with the price or demand, the supply of new Bitcoin every year or over time is coming down.
Yeah, yeah. Hmm.
Okay. So, it's just a different nature. So that makes it very interesting for people then looking for a way to protect the purchasing power of their money. Okay. Now, let's draw a distinction between money and currency. This is a very important one. Okay. Money is just a medium of exchange. It's actually whatever you and I decide is a form of money, right? And the classic example is that people find themselves in prison. They don't have money in prison, but they do have cigarettes and other items that they can trade back and forth and use that as a form of money,
Yep, that's clear. Yep.
right? So it doesn't have to be government issued money. That's currency. When it's government issued money, which is a subset of money, that's currency, right? It's issued by the government, it's controlled by the government, that's currency. But money is a much broader concept than that. And the important thing about money is it needs to be useful as a medium of exchange, but also as a store of value. And that's where currencies today fall down because governments are just issuing more and more and more and printing more. Okay. Now, on this chart, we ask the question, would the dollar, whether it's US dollar, New Zealand dollar, collapse without Bitcoin? And the answer is yes, right? These inflationary forces, these debasement forces are at work. And so the question is then, is there something else that people can put their money in to protect themselves from these forces of inflation and monetary debasement? Okay. Okay, so I'm just going to skip ahead here a little bit. Um, so the answer is yes, we have Bitcoin.
Exactly.
Bitcoin now is about a $2.4 trillion asset. And if you look at the world's largest assets, this is a table that shows some of the largest companies. At the top of the list is Nvidia at about 4.4 trillion. Then we've got Microsoft and Apple and Google, Alphabet. And then Bitcoin is number six at
Hmm.
2.4 trillion. Now, at the very top of the table is gold. Gold has a market value globally of about 22, 23 trillion dollars. And one of the reasons is that people see gold as a great store of value, right? And throughout history, gold has been a very good store of value, although at times it's kind of fallen down on that promise. But over time, it's been a pretty reliable form of money as a store of value. Now, we have to recognize that gold has its issues. They do mine more every year, right? It's
Yeah,
difficult to move and protect. It's going to cost you some money if you want to move a serious amount of gold and
yeah,
protect it.
it's heavy.
It's heavy. You can't just go somewhere and slice off a piece and pay for a meal with it. Like this, it's got issues in terms of transactional uses of money, but as a
Hmm.
store of value, it's pretty good. You could carry a
Yep.
gold bar with you somewhere.
Yep. It's
Right.
not perishable. It's, yeah,
Yeah.
transportable to a degree. But yeah, it is a
Right.
2% inflation rate. They're producing 2% more on average around the world. So you still are debasing. Yep. Or
Now,
inflating, I should say.
yeah. Now think ahead to a world, and this is maybe sort of, we're getting into the next show that we're going to do, but think ahead to a world where the cost of energy is super low, right? And so at that point, then you could actually, it may be cheaper to mine gold, or you might actually be able to make gold from other materials, metals,
Yep.
right? With enough energy, you can make gold,
Yeah,
and
because that's already been done, hasn't it? It's just cost prohibitive. So
it's cost
the
prohibitive.
alchemists can actually make gold from
That's
other
right.
materials. Yeah.
And then, of course, as we go into space, mining asteroids is all the gold you could ever want on in the asteroids. So we may be heading into a future where we have an abundance of gold for various reasons,
Possibly, yes.
right? So gold success as a store of value may actually be at risk just with those things happening.
Hmm.
Okay. I'll just skip ahead here real quick. I'll come back to some of these others. So you asked earlier, Lisa, about the different sort of features of money, traits of money. So this is a good table. And again, for your podcast listeners, they won't be able to see this, but we'll talk through some of these lines. So you want money that is interchangeable, right? One gold bar is like another gold bar. For the most part, there could be some impurity issues, but if you get the gold graded, then it's very similar, right? And same thing with a dollar. It doesn't matter what dollar it is, whether it's in your pocket or somebody else's pocket, it's the same thing. It's exactly the same thing with Bitcoin, right? So it's fungible. That's an important feature of money, right? It also needs to be, as you mentioned, non-consumable, right? And gold and money and Bitcoin meet that standard.
Hmm.
Portability is another issue, and we just talked about how transporting a little bit of gold's okay, but a lot would be very problematic. And if somebody knew that you were transporting a lot of gold, you've now got a massive security risk.
Yep.
Same thing perhaps with the dollar if you're transporting enough of it.
Hmm.
So even though it says high on this chart, I think there's still some risks there. With Bitcoin, you don't really have those risks in terms of transporting it. It's all digital. Durable, gold lasts. It doesn't rot away. If you were to use some other commodity as money, you would have a problem perhaps of, the grain or whatever it is you're using actually rotting away on you.
Yes. Yep.
Okay. The US dollar may not be that portable, but you know what? It's cheap enough. You just keep printing more. And with Bitcoin, it's very durable. There's no issues there. Gold is being divisible. Well, we talked about that. It's a bit of a problem to split a gold bar into smaller pieces. You can do it. Takes a little bit of work. The US dollar is pretty highly divisible, but you have to have different forms of money, the $20 bill and the $10 bill and the $1 and so on. And you get to the point where it costs more to make the currency than they're actually worth.
Yeah. So you don't have a couple of cents worth of
Yeah.
things being done anymore. We don't have 5 and 10 cents, I think, anymore, or one and twos we don't have.
Yeah, and the US for some reason we still have a penny, but no one wants to carry them. They're not really worth anything, but
No.
yet we still have it. Yeah, it's kind of silly. All right, then we get down the list in terms of secure. We talked about gold as being a challenge. You can't counterfeit it. I guess this is what this is talking about in terms of being counterfeited. It's possible to counterfeit gold and fool people, and that's been done. You can
Hmm.
also counterfeit the US dollar. That's also been done.
Hmm.
It's impossible to counterfeit Bitcoin.
Mm.
Okay. Easily
Maybe.
transactable. We talked about that for gold. That's very difficult. For the fiat currency and Bitcoin, that's very high, no problem. Scarce. Gold is pretty scarce, but they do mine more. And as we mentioned, that there's future risks to the how scarce gold is. US dollar is not scarce. They can just print as many of those as they want. And Bitcoin is extremely scarce. So this is where Bitcoin really shines versus the other two.
Hmm.
Um, Sovereign is a government issued. Gold, no. It's money for the whole world. Gold in Russia is just as good as gold in New Zealand, is just as good as gold in the United States. Um,
Outside of the system of money, which is very important.
yes, that's right. Fiat money is government controlled.
Mm.
That has its pros and cons. It's certainly a negative if the government is doing something that's against the good of the people, essentially,
Yeah. Look at
right?
Venezuela and Brazil, like you mentioned before,
Yes,
but
that's
also
right.
us. Yeah, also us.
Yeah. Now with Bitcoin, again, there's no one that controls Bitcoin. It's a global decentralized network. And that is a tremendous benefit, particularly as we get to the point where governments have abused their power to print money. And if they get themselves into trouble, a Bitcoin essentially kind of holds them accountable to that
Mhm.
because people now have an alternative. Okay. We talked about how Bitcoin is decentralized, and also Bitcoin in some degrees is programmable.
Yep.
And so if you have money that's on the internet, it's kind of nice to be able to have some programmability to it, which you don't have with gold or with fiat currency. So those are just a few of the benefits. And that's looks pretty good if you look at the Bitcoin column.
Yeah.
The only one where it's not high is
It's
the government issued,
that
and
it's
that actually is also a benefit.
it's also a benefit. So it's perfect money, really. It's the
Yeah.
most perfect money that we've ever produced as a species.
And that's right. And so this is this on this page. So the message here is that Bitcoin can be difficult to understand because it's all of the following at the same time. It's an ideology, it's a protocol, it's an asset, it's a network, it's ethical, it's a digital commodity, it's scarce, it's digital gold, it's digital capital, it's global, it's also digital energy, it's a digital economic system, and a digital defense system. And as you mentioned, it's the world's first perfect money. It would be hard enough to understand one or two of these, let alone 14 of them.
Yeah. And people don't know, I think people are just like cursory, like I came to the Bitcoin world to hopefully invest in a better future and make more money, right? But I stayed for the revolution. There's a
Yeah,
quote that Ricardo Salinas, a billionaire from Mexico, I stayed for the revolution because once I understood that, when I certainly don't understand it to the level that I need to, and it's already 5 years in, right? But I understand some of these aspects to it, and it's layer upon layer of the onion. The more you
yeah,
dig, the more you realize this is like what Satoshi Nakamoto made was a gift to humanity, basically. And it's
that's right.
a way out of the mess that we've created with our fiat money system that's been debased and printed away into oblivion, basically.
That's right. And so let's peel back some of those layers just a little bit here today. Again,
Yeah.
this would take us hours, I think, to go through this and do this all justice, but
Yeah.
we'll just kind of on a few things, right? And so I have written about how I think that essentially Bitcoin is going to be sort of a financial black hole
Mm.
that's going to absorb a good portion of the world's capital. Okay, because of the benefits that we've just talked about in terms of its superiority to other assets. And unless you're earning a return that's on that the one chart we looked at that was higher than 13%, you're losing ground relative to the monetary debasement. And since there's not many investments that can consistently produce 13% or higher, that capital is going to flow into Bitcoin. Now, this chart is sort of a list or sort of shows you the total global asset value of about $1,000 trillion, $1 quadrillion in the world. It's a colossal amount of money. Okay. The largest portion of this is real estate, and that makes sense, right? People have to live somewhere. There's a lot of
Mm.
buildings, a lot of real estate all around the world. It's about $380 trillion of value. Okay. Bonds is the next biggest part at about 318 trillion. We've got 130 trillion of money in banks, CDs, savings accounts, things like that, money market funds.
Mhm.
Got a good chunk of money, 135 trillion in stocks, stock market value. Right? And a lot of people are surprised to see that that's as small as it
Yeah.
is relative to bonds and real estate.
Yeah. I'm surprised that bonds are so high, really, and that equities
Yeah.
are so low. Yeah.
Yeah, we have in many ways, a debt-based economy, and you can
Mm.
see that here. And
Mm.
a lot of the bonds, by the way, are supporting the real estate value. So those kind of go hand in hand, right? Most people don't pay cash for real estate. There's a mortgage or there's debt
Yeah.
backing it,
Yeah. Yeah.
right? So that
So
kind of
that's
makes sense.
all debt based. Wow. Yeah.
We've got about 27 trillion in art, cars, and collectibles. So other ways of storing value besides these big areas. We've got about
Mhm.
22 trillion, as we mentioned, in gold. And we've got a little orange box there in the corner of Bitcoin at 2 trillion. So if we think
Nothing.
about it, say, it's tiny, right? It's 0.2% of the total global assets.
It's tiny. Yeah, we've got a long way to go.
Yeah. Now, of this 1,000 trillion, about half of it is in assets that we use for utility, right? We have to live somewhere. We need money to buy things with. Companies need money in cash to function the businesses and so on. So a lot of these assets are actually for their utility value. But about half of the global assets are really just sitting there as a long-term store value.
Yeah.
So again, we can kind of separate this into two different things, right? We need money to be able to function as a society, means of transaction and all that. But a good portion of our money is just we want to store that value and protect that money for future use, whether
Yeah.
it's
So
in a plan.
yeah, we're saving, or because we've worked so hard, we've saved a little bit of money, what's left after tax and all the rest of it, and then we want to preserve that wealth for the future. And this is where the crux of the problem lies, because
That's
our
right.
long-term capital preservation is in jeopardy at the moment.
And as you said a minute ago, Lisa, most people think of their hurdle rate as being inflation,
Mm,
let's say 3 or 4% or 2 to 4%, but it's actually higher than that. The monetary debasement figures puts it much higher than that,
yeah,
right? It's probably at least 7 or 8% over the long term.
yeah, that's pretty
And in
scary.
recent years, it's been
12.
much higher.
Yeah, yeah. I'll give you an example. Like my husband's a firefighter, and they've just been offered 1% for the next 3 years. And I'm like, so we're going to be down 40 something percent in 3 years. Your
Yeah.
wages will effectively be, if we're debasing at 13% a year, 39, 40% down. Um, that 1% is not going to cut it. In other words, the middle classes to which we belong are being gutted fast. That's
Yeah.
really frightening, because that's what's happened. We've seen it in third world countries, in Brazil and Nigeria and places like this. And we all think it can't happen to us, but it is happening to us now.
It's happening around the world to many people, and it is, as you point out, it is happening to us in a very similar way. We're maybe not at the dire point that a lot of those other countries have found themselves at.
Mm,
The problem is we don't know where that point is for the Western countries of the world.
mm.
But it's not an unlimited number. There is a point where we run into trouble.
And we can see the debt in the government debt around the world just spiraling out of control, like exponentially now. It's not just a linear, nice progression step up as it has been, over the last, 50 odd years. It's now getting completely out of control. That's what scares me and makes me want to study this more
Mhm.
and spend the time.
Now, if we look out to 2045, so 20 years from now, these aren't my projections. These are from Bitcoin 24,
Mhm.
and they make projections about the returns on Bitcoin each year for the next 20 years. And so these numbers come from that. And so they're projecting a global asset value of 4,000 trillion, 4 quadrillion, a 4x increase from where we are today over the next 20 years.
So the total, yep.
Total, right? And we're looking at equities going from 135 trillion to 850 trillion, a very significant increase.
Mhm.
We're looking at real estate going from 380 trillion to 1,360. So an extra quadrillion on real estate. So, right, so projecting massive increases in real estate over time.
Mhm.
Bonds going from 318 trillion to 540 trillion. The money, the cash, going from about 100 and I think it was 130, 129 trillion now to 500.
Mhm.
Art going from 27 trillion to 110. Gold going from 22 to 45 trillion. So everything inflating, everything going up.
Yep.
But the one that they expect that will inflate the most over the next 20 years is Bitcoin, going from 2 trillion to 280.
Wow. So we're really early, super early, as we've
Really
said.
early,
Yeah.
extremely early. To answer the questions about, oh, it's too late, Bitcoin is up,
Yeah.
30 million times since the beginning. No, we're just getting started.
Yeah, exactly. It's not too
And
late.
this is just Bitcoin as a store of value asset, by the way.
Mm.
Not using Bitcoin really for anything else
Mm.
in terms of transactions and what that might be
Yeah,
worth.
I want to talk about that at the end. Actually, remind me the medium exchange thing because that's got me confused. So we'll talk about that later.
Yeah. Now, this is going to be a chart that's probably really hard to see for anybody looking at this, but the important thing to think is if you think about money over time, it takes a little while for money to reach different milestones. So
Hmm.
initially, something might become a collectible, and then it might provide, a store of value, and then eventually it becomes a medium of exchange, and then eventually it becomes a unit of account. We think of things priced in dollars. Maybe eventually we'll think of things priced in Bitcoin.
Mm. Mm-mm.
Okay. So that's enough to say on that. Let's see here.
So maybe we talk about it now. Then my question, if I may, um,
Yeah.
is Bitcoin, because the experts on in Bitcoin sort of differ on this approach. There's got someone like Jeff Booth who who's talking about everything's going to be on the Bitcoin standard and we will have that as a medium of exchange. They're building the Lightning Network. They're building other Nostra and other systems that we can actually use this as for our day-to-day payments. Like I can go and buy my coffee with a Bitcoin, right, or part of a Bitcoin. Um, then you have other experts going, no, it's not going to be a medium of exchange. It's more for a store of value. It's digital gold only. We need to keep the current system going with dollars. What's your take on that, or is it a timeline thing? And we hopefully will get to an eventual medium of exchange situation where everything is denominated in Bitcoin, and therefore the whole world sort of switches over to this new system. Or is that like an impossibility and we're going to run parallel systems for a long, long time at least?
Yeah, I don't think we know the answer to that question, but I certainly think that over time, we move from what people will consider to be a reliable store of value, and I'm not even sure that we are there yet. On this chart, it's showing that we're down here somewhere,
Yeah,
right? But over time, between the store of value and the widespread medium of exchange, you need to have greater liquidity, better price stability, greater acceptance and recognizability, and these are no small hurdles.
yeah,
So if we are to move along this curve, then these things have to happen first, and they will happen over time. It won't be an overnight thing. As another country experiences collapse in their currency, then that will be another sort of notch. Or as other events happen and people flock to Bitcoin perhaps as a safe place to put their money in addition to gold, all those things will help. As the volatility of Bitcoin comes down and is less and less over time, that will help a lot because I think a lot of people right now really struggle with the volatility in Bitcoin.
yeah, yeah, they do. But people who understand this understand that the volatility is the vitality of this right now, and this is where the opportunity lies hugely. To get in, but it is very hard to put your hard-earned money into Bitcoin to go through a bear market. And we've been through been through two cycles now. We went through the worst bear market that it was pretty bad. We were all shaking in our boots. And then we've ridden back up again, and now we're riding high on great successes. But there'll be another bear market, and so getting your head around that, having the right time horizon for your investment is really, really key, right?
It
And
is.
getting not panicking when it goes down 10% in a day because that's Bitcoin.
Here's a good way I think to think about it that a lot of people can relate to.
Yeah.
If we think about pricing Bitcoin, buying an iPhone and pricing it in Bitcoin. So when the iPhone 4 came out, it would have cost you 2,857 Bitcoin at the time. When the iPhone 5 came out, it would have cost you only 16.6 Bitcoin.
Wow,
So talk
huge.
about a deflationary asset.
Yeah.
iPhone 6, 2.17 Bitcoin, right? And so on down the line. You get all the way down here to iPhone 13 and it's 0.02 Bitcoin. So even though we've had all this fluctuation and volatility in Bitcoin, if you just think about it in terms of buying something, once every year, every couple of years, it's these things have gotten cheaper and cheaper in Bitcoin terms.
Yeah, and that's a really good example. And it's a matter of zooming out and seeing the range that Bitcoin goes up and it goes down, and we've had 80% drawdowns and stuff. But then over time, I think you've got a beautiful chart that shows that zoomed out vision of that.
Yeah. Sorry for flipping through these slides here.
Yeah,
So
there's a
here, and here's the drawdowns.
yeah.
So the orange shaded area is the drawdown. So that basically represents the percent drop from a peak down to a low.
Mm-hmm.
Every time the orange line hits the the axis there, it's making a new high. And you can see how few times it's hitting this top axis.
Mm-hmm.
And every time it does, the Bitcoin price is making new highs.
And it's
And
going
you
up
can
and
see
to the
over
right.
time we've had some massive drawdowns. At one point, Bitcoin was down 90%. In the next
Mm-hmm.
cycle, it was down 80, it was down 80. In the most recent cycle, it was down about 75% from its peak to a trough.
Mm,
So this kind of price action scares a lot of people, right? And for good reason. If you're going to store your value in something, do you really want to wake up one day and see it down 75%?
mm.
Well, no. But please keep in mind that Bitcoin has averaged here are the average returns from these different dates. So if we just pick a date, 2020, since then, Bitcoin has averaged 60% annualized returns
Wow,
since
from
2020.
2022, 2025.
Okay.
Yeah.
And so even though you've got here's the annual returns. There's only 3 years where Bitcoin's been down.
Mm-hmm.
And
Mm-hmm.
yet people live in fear of those kinds of years. Right. But look at all the other years and all the other returns in those years. But
Amazing. I mean, of course, at the beginning it was out of control, the returns, like huge. But if we just look at the last 6, 7 years, when it's sort of been a bigger, stronger, more stable, recognized asset, it's still horrifically high CAGR. And
yeah,
so CAGR is, compounded annual growth rate. So in when you understand the power of compounding, that the eighth miracle of the world, compounding, that's when it really becomes a powerful story. Like it becomes like the hurdle rate for every investment decision that I make. It has to outdo Bitcoin for me to warrant even looking at it. Like we were
that's
looking
right.
at a rental property last year, and I was like, what? When I went through all the numbers, and I didn't have as deep a grip. It was 2 years ago, deeper grip as I do now on Bitcoin. It was like, why the hell would I put myself through all of that, do the building, do the whole thing to earn less than I could have just by buying Bitcoin? That's now the hurdle rate. So instead of buying another house, we, put it more into Bitcoin, what we could.
Yeah,
So yeah, and we've been through the lows, and I think all of us who've been in the Bitcoin space for 1, 2, 3 cycles, I think it's really probably on your third cycle that you really start to get it, like, um, and you go through these horrific, oh my God, it's going to zero moments, and then you come out the other side and it's back up at 5 times what it was like 3 years ago, and you're like, damn, why didn't I buy at 20,000 when it
yeah.
was down there? What was I thinking? Why? But you
And
look over the political things and you think, okay, yeah, there was, you couldn't have foreseen it all, right? How much tailwinds we have now compared to where we were two,
right.
2 years ago.
But again, I don't think the situation has improved much in that regard, right? And so again, look at this table. So even if you bought in 2014 and then suffered a 60% decline,
Hmm.
compound annual returns since then, from then until now, including that 60% decline, is 52% per year,
Wow. Try and do that. Try and do that in any other investment.
right?
Insane.
Even if you bought it in 2018 and you suffered the 74% decline, your compound annual return since then and including that decline is 31% per year.
Wow.
And even if you bought it in 2022 and you suffered the 64% decline in that year, your compound annual return since then has been 27% per year,
Yeah. And if you were lucky to
right?
buy it on the dips and then, ride it right up, you were more in the 90, 70 to 90% range.
Even higher. Yeah, this
Yeah.
is just looking at calendar
Yeah.
returns. Yeah.
Yeah. Right.
There
It's
has been no
insane.
stock that really can touch this,
No.
or very few. In recent years, Nvidia has outperformed this. But
Yeah.
again, you have pick like the winner in the stock market in order to get better results in this.
Yeah, and that was the AI, really, which is the biggest revolution in technology that we've ever seen. And why we're going to be talking about Tesla next time, because that's probably poised to do the next NVIDIA-like climb.
Yeah.
So yeah, but yeah, carry on.
So
That's really
let's
good.
so let's get to a couple of areas now I think that a lot of people may not have much appreciation for, and we're just going to touch on these. I think these are really important. One of the things that people have issue with, and I apologize for this visual here. It's really hard to read. It's very fuzzy, but I'll just kind of talk you through it. They see Bitcoin, which was created in 2009, as being new and untested, right? And by that lens, you could say, yeah, 2009 is not very old, but we have a lot of companies that came to market in 2009 that we now rely on today.
Yeah.
But still, this is different. We're talking about money. But what I want to get across with this chart is that really since the 1970s, we had some of the underlying features of Bitcoin
Mm,
being developed and tested and tried. And so all these lines here talk about some of the different things. Linked time stamping, public keys as identifiers, Byzantine fault tolerance, digital cash, proof of work, smart contracts, peer-to-peer networks. All these things were being worked on by different people, different periods of time. And the genius of Satoshi was putting this all together into one package.
hmm.
Satoshi really didn't invent anything special. He was just using pieces that were invented by other people and putting it together, essentially.
Yeah.
And that's the brilliance of it all.
Yep. And the
Okay.
hash and creating the difficulty thing was really the breakthrough point, wasn't it? Was it not?
Yeah,
Yeah.
number of features like that,
Yeah.
sort of very technical features that are also very important. Yeah.
Yeah.
Now, let's talk about now Bitcoin as a protocol. So protocols are interesting because think about how we access the internet. We use TCP/IP. It's an internet protocol. Everybody uses it. There isn't a competing protocol. It's one.
Hmm.
Think about how for email, SMTP is the protocol for sending email. Okay. And it's my understanding that that's it. There's only one. There
Hmm.
might have been competing protocols in the beginning, but we coalesced around one. Voice over internet, VoIP, right? We're on, Zoom right now. We're using this protocol, etc. Bitcoin essentially could become a protocol for money.
Hmm.
And over the last, since Bitcoin was invented, we've kind of been going back and forth to try to figure out what is going to be the protocol. And for reasons that we'll touch on in a second, I think it's very clear to me that Bitcoin will be the winner. And the thing
Hmm.
about protocols, as I mentioned, is that they tend to be winner take all,
Yeah, exactly. Protocols are winner take all. Yeah. Mm.
right? It's not like there's a market share that
No.
HTTP has 20% of the internet market and something
Yeah.
else has something else. It's 100%.
Hmm.
That's important to understand that if Bitcoin is as secure and as great as we think it is, then it has the potential to completely dominate.
Mm.
So that's important, I think, to understand. All right. How is Bitcoin protected? And without getting into sort of the technical explanation here, one of the things that's critical about the Bitcoin network is its hash rate. So what's happening is we've got computers all around the world that essentially every 10 minutes have to guess a massive random number in order to win the contest to write something on the ledger. Think about going to your bank. Every time you go to the bank, they have to compete. Which teller, the tellers have to compete which one's going to take your service. This basically is happening on a global scale.
Hmm.
The Bitcoin network, all the computers are competing against each other for the right to change the ledger. That's what
Hmm.
makes it decentralized. It's not just one computer controlling it all. Now, I want to put this into some perspective, how colossal this 855 exahash per second is. And you can see that's been growing over time. Okay.
Hmm.
We all understand, kilo, mega, giga, tera, peta, and then we've got exa. It's
Hmm.
1 quintillion.
Quintillion. Okay.
So we've
Can't get
got
my head around that.
855 quintillion operations per second in the Bitcoin network.
So that's guesses. So this is a
Yes.
guess that the computer is making the hundreds, or I don't know how many thousands of decentralized or nodes or things there are around the world, but they've even got them on the space station, haven't they? So if anything
Yeah.
happens down on Earth, we can still have that ledger. So each one of these nodes has the complete ledger up until this point, and then every 10 minutes a new block is formed, correct?
Yep.
And so to get that into that next block, you have to make 1 quintillion guesses for one right guess. And that's the proof of work concept.
That's right. Now, so what does this do? Well, first of all, it makes it very difficult for any one computer to control the network or groups of computers. They have to compete globally every 10 minutes,
Mhm.
right? And if you are malicious and you do want to take over this network, you're going to have to bring a ton of computing power.
Yep.
And by the way, it's not just computing power, it's the energy to go with it. So it's going to be super expensive to spool up that many computers to take control of this network,
Like hundreds of
right?
thousands. So only a government like the US or the Chinese government would be the only two contenders to, if they really wanted to even consider that. But they've got to do it
Potentially.
in 10 minutes. They've got 10 minutes
Yeah.
to do it
And the
before it's
beautiful
all.
thing about this is if China decides to do that,
Mhm.
we can easily counteract them by doing that as well. And that improves the security for everybody. It raises that hurdle. It raises the exahash from 855 to some other higher number. So it would become even more expensive for everybody to take control of the network.
Wow. So you'd have to
It's
bring
the
more and more
opposite
money.
of like nuclear warfare, where we have mutually assured destruction. As everybody acquires more warheads,
Yeah.
we run the higher risk. This is the opposite. It's like mutually assured protection,
Wow. So clever. So
right?
clever.
And so let's look at this military angle for a second, because I think this is something that is very underappreciated.
Mm-mm. Yeah. I followed
So
Jason
there's a
Woodward.
gentleman here in the US. His name is Jason Lowry, and he's part of the US Space Force. And he went to MIT and did his thesis on Bitcoin. And he says here, this is a post from X. He says, imagine inventing a weapon that physically prevents attackers from denying people access to their private property without resulting in bloodshed, creating the most game-changing human defense tech in 200,000 years. And then he adds, and then refusing it to call it a weapon because weapon sounds bad.
Yeah. And he's
Okay?
written a book on this, hasn't he?
He
Yeah.
has. Here's the gist of it. Think about the United States or even New Zealand, but I'll just talk in terms of the US. We have a military that protects our interests from the land, from the air, from the sea, and now from space.
Hmm.
If you want to attack the United States and get anything from the US, you know you're going to face this military and that you're going to probably pay a very high price to attack the United States.
Hmm.
Power projection, right? And most US citizens do not complain about the fact that we have a very strong military. They might complain about how much it costs, but we're all very happy that we have it.
Mm.
Okay? So think about cyberspace now. How do we protect assets in cyberspace? With passwords and, giving somebody the keys to the kingdom? That's not
Yeah.
very effective. It's all, you can hack that very easily. Jason sees Bitcoin as a military type technology to protect assets in cyberspace. And the reason is, again, you have to bring a lot of energy to bear in order to attack Bitcoin. And that's what makes it so costly. Just like you'd have to bring a lot of energy to attack the US Air Force, you would have to build up a massive air force yourself. Same thing with Bitcoin is you have to build up a massive fleet
To
essentially
attack
of
it.
computers. Yeah.
So in this graphic, for those who can't see, this would be things like foreign propaganda, denial of service attacks, spam, troll farms, bots, systemic abuse could all be we could be protected from that through the Bitcoin defense system, if you like.
That's right.
according to Jason. Um, that's a lot to get your head around. Like how does that so this is not just a monetary system, this is a technology that could be used to protect ourselves in a positive manner without bloodshed,
Let's,
by the way.
yes. Let's talk about spam. I think it's something that we all have personal experience with.
Yeah, yeah, we've all
Every
been
day, our
through.
emails are inundated by spam.
Yeah.
And the reason that happens is because for the person sending the spam, it is very cheap to send hundreds of millions of emails to people. There's no major cost in doing that.
Hmm.
But imagine for now if they had to pay a small fraction of a cent for every email they sent. Now sending out 100 million emails gets pretty expensive.
Hmm.
And further, if we identify the server where that email is coming from, you can increase the cost on that particular server and make it even more expensive for them to send those emails out. This is the kind of sort of method that you could use with Bitcoin to protect cyberspace. You just essentially add cost to the system.
Yep. To
Now,
stop
if
the
you and I
spam.
at least
Yep.
are sending emails to each other and it costs me a fraction of a cent to send it to you, I'm okay with that. No, no big deal, no problem.
Hmm.
Right? Yeah. Sorry, I
But if
interrupted
you
you.
no, no, no. So if you get billions of emails that you're trying to spam people with, that's going to cost you a lot of money to do that. And they've sort of haven't they trialed that on X? Where they wanted to stop, yeah, spam sort of posting and bots, or I know they've tried it in other places to stop bots basically posting and doing things. Is that correct? And they
Well, my
charge a tiny amount, or it's been talked
yeah,
about at least.
I don't know if that's actually in place now. I would imagine that they're using AI tools right now to identify
Right.
spam bots and things like that, and just basically shut them down when they identify it. But that's kind of, they're sort of always one step behind
Mm-mm.
where the people using the bots are. So it's a very difficult thing. This is actually a way to physically stop this,
Mm-hmm.
not just use software.
Wow.
Right? You're making it now physically, expensive. So basically, you have to bring a lot of energy and a lot of cost to do this. So this is what Jason's talking about is in terms of why it's a military technology.
Mm-hmm.
This is the cover of his thesis. It's called Soft War, a novel theory on power projection and the national strategic significance of Bitcoin. He
Mm-hmm.
published this in February of 2023 through MIT. It was still available on the internet. He also published it on Amazon, and for a while it was actually banned on Amazon.
Yeah.
His military superiors decided that this was too important to have out there in the public sphere, although they couldn't delete it from the internet. I believe it's now on sale again. But
Mm-hmm.
this is a very important book to read if you really want to understand Bitcoin in ways that is not just as a form of money.
Yeah. So then another layer to this whole story that we haven't even scratched the surface of, most of us.
Yeah. And here's where Jason actually talked about that. He says, for those asking what's been going on with me, I was ordered to take software down and asked to stop talking about the subject publicly. It doesn't appear
Mhm.
on MIT's library either, but it always was available out there on the internet if you knew where to find it. Um, and this was in July of 2023, so that was a few months after he published his book.
Right. Amazing.
Um,
Hmm.
yeah.
Hmm.
So, Lisa, you made a comment earlier about how this really changes the hurdle rate for investors.
Yes. Yeah.
And I wrote a post about that on X, and I completely agree with you, although I think it'll take maybe a little while to kind of evolve to that stance.
Mm-hmm.
But if we think about it, let's say you're in a corporate boardroom and you're a company and you're looking to invest in a new project, right? And you're the CEO, and I've done an analysis on this, and I say, you know what, we've got project number one, and we think we can earn, 8.5, 9% per year on this project if we go ahead with this. If we commit, $200 million to this project. We've got project number two, which is even better. We can get 10% per year, maybe a little bit more risk. We've got projects three and four, even a little higher, but more risky. We're not really sure if we can get these returns. This is what we're looking at. If we spend this money, this looks pretty good, right? And you say, yeah, but look, I've got Bitcoin over here, I think can compound at 20, 21%, right? It becomes a
Sounds
hurdle
good.
rate that
Yeah.
you
It
measure
becomes.
all the other.
It certainly has for me, like
Yeah.
personally, just personally, I've stopped myself and pulled myself back from, like I said, rental properties or, business decisions. Do I put that even on a daily basis soon, like in relation to, do I put this $100 that I've earned today into a YouTube ad or a Google ad or to reach more people, or do I put that into Bitcoin?
Hmm.
It gets down to that sort of a level, you
Yeah.
know, when I'm trying to make decisions, and not that I have an easy answer because I have to do both, right? To some degree, you have to function in your business, but at some point, it's like, hmm, is the business that I'm running actually the right model? You know,
Right.
is it starts to get very deep, like, and especially at the point where we're at the moment, where the Bitcoin adoption curve is going through the roof. We're at that S curve moment where the institutions are coming in, the guardrails are coming in, the regulations coming in. We've got a positive government in America, of course, the most powerful government in the world, now for crypto and Bitcoin. And so that we've got a completely different structure. Everything has to be now put through that filter when I'm just making my own little business decisions for my own little life. And
Yeah, and I think it
yeah,
even goes a step further than that too, because it's really now at every level, and certainly at the personal level, that's really important, right? We looked at the iPhone example a minute ago, 2,857 Bitcoin to buy that iPhone 4.
yeah,
Run the math on what that's worth today,
yeah,
right? And how costly that purchase was.
yeah,
You really need an iPhone, right? If you're going to be spending that much Bitcoin.
exactly. I mean, like yesterday, I bought a piece of equipment for my clinic, and I'm like, from a monetary standpoint, it was not worth me doing it,
Yeah,
but for the health, because um, for the health benefits of my clients, for the health benefits of my mother, for my family, that was part of the decision-making process to go ahead and buy it. But
yeah.
it really hurt because I know that if I put that money into Bitcoin in 5 years, that machine has probably cost me a hell of a lot more than it did. You know, and when you start to look at everything through that lens, it's like we joked yesterday. You said, "Well, how many chairs have you got in your house, and how many do you need? Maybe you sell the others and put it into Bitcoin." And I'm like, "Yeah, exactly. Sell
Yeah,
everything, put it in now."
that's
until
right.
we get to next week's conversation on Tesla, because then it's like, oh, I know which
That
one we're
might
going
be
to
an
put in.
exception.
It
Yeah,
might be an exception. That might be the NVIDIA moment of that company. But that's the sort of importance of understanding and spending the 100, or the 1,000 hours now to understand Bitcoin a little bit, and what and how deep this is,
yeah,
and just really starting to dig a little bit more into, it's not just, oh, I'm going to make a bit of money on the side type of thing. um, I don't know if you've read Jeff Booth's work, or Larry Lepard's work, or Broken Money by Lynn Eldon, or The
mhm.
Fiat Standard, and all of these
Yes,
fantastic books that really start to change your perspective on everything. None the least, like I've got Jeff Booth coming on the show in October, which I'm super excited
fantastic.
about. Yeah, he's amazing. Um, and again, I have to listen to dozens of hours of lectures of Jess to get the concepts, even like they're so big and they're so foreign to me initially. It takes, and going back to the beginning of your lecture here, take the time. We were all against it before we were for it. We all rubbished it, poo-hooed it before we understood it. Even Michael Saylor, the biggest bull on Bitcoin in the entire planet, who has 670 odd thousand Bitcoin, was, got that famous tweet back in the day, that it was complete rubbish and not going to go anywhere, or something, about to collapse, or something that he wrote, I
That's
think.
right. I actually have that here. I can pull it
Yeah.
up in just 1 second. Yeah. Just before I do that, the one other thing I just wanted to mention is if you think about if you are a company, right, and you have a bunch of capital that is in excess of what you need for the business. And traditionally, what companies do is they will issue a dividend. And in more recent years, they'll buy back stock because that's a
Hmm.
more tax efficient way of returning capital to shareholders, and it boosts stock prices And
Right.
for executives that have options, that's a good thing for them. So that's why they do that.
Hmm.
But think about now then the world that we're heading into in the next 5, 10 years. We know this AI disruption is coming, right? And we'll talk about more in detail in the next show, which I think your viewers will find to be very interesting. But we've got this massive disruption coming. Do
Mm.
you think it's better to face that disruption with lots of capital or a small amount of capital,
Yeah,
right? The answer is pretty
totally.
obvious,
Totally. Like, why would you give back money right now when you've got this huge revolution happening in AI and what's coming at us? When you need to be able to fight the fight and to be in the fight, you better have a good treasury. And if you
right?
don't, if you're a big company and you need to, and God knows what's going to happen to a small little fish in the sea with
Yeah.
what's happening. Keep your tap dancing shoes on, as James, our mutual a friend
Hmm.
says, from Invest Answers, who I love his work. Keep your dancing shoes on, keep your head out the window, get ready to jump
Right.
in one direction or the other. And I think that's really good advice. Be adaptable right now. Like, you have to be adaptable and be able to pivot really, really quickly. And with the AI revolution, getting into that sort of a topic. I mean, how big do you to see, just briefly before we, have we actually wrapped up your whole presentation? We didn't really, did we?
Well, there's a
Oh,
lot more we
oh,
could go into if you want
yeah,
to, but here's Michael Saylor's quote,
yeah.
his journey from a skeptic to believer. This is back in December of 2013, and he said, Bitcoin's days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling.
And online
Now,
gambling went on to be huge as well as Bitcoin.
that's right. So he was wrong on 2 points
He's not
there.
always right then, but he's obviously
That's
learned
right.
from his ways. And I like that he reshares that type of stuff and talks about it, his journey from skeptic to believer. And that's
And
okay.
he's now the biggest evangelist in the world for
Yeah,
Bitcoin.
and oh my God, brilliant, absolutely deep, a deep thinker on so many levels that it's just really sort of mind blowing and actually revolutionizing with his stretch and stride and strife and all his new products that he's brought to market. It's going to completely revolutionize the whole bond market and the whole way that finances operate. It's pretty
Yeah, and just
interesting.
to share with your viewers quickly what that all means.
Yeah.
So, in the United States, for example, if you have money in bonds, you might earn 4 or 5%, and if you take some risk, maybe 6 or 7%, right?
Hmm.
What essentially Saylor and MicroStrategy have done is they've issued these preferred stocks that pay dividends instead of interest. So they're not debt investments, they're equity investments. They never need to be paid back, but they're kind of like perpetual. In some ways, you can think of it as perpetual bonds that never mature. So if you
Hmm.
buy it, you can get a dividend yield right now on cash at 9%, and you can get a yield even higher than that if you want to take a little bit of interest rate risk. And so what he's done is essentially created a mechanism to suck in capital from the traditional bond market world
Yeah.
and banks and invest it in Bitcoin and pay people a higher yield. And these investors, they don't even need to know that the underlying is Bitcoin. They're just seeing the higher yields, right? Backed by $75 billion of Bitcoin. And that for them is enough because it's well collateralized.
Yeah.
And so he's developed this mechanism now to essentially suck in billions and billions of dollars of capital, provide a really nice return for the investors, and continue to acquire more and more Bitcoin. It's really a
Without
phenomenal thing they've done.
phenomenal, and I'm only just getting my head around it, and I certainly don't have the depth of grip on this what I need to have, but it seems to be like a revolution for the whole financial capital markets. Like, this could suck up hundreds of billions of dollars into the space, because this is sort of an untapped market. It's not just ATMing it with normal diluting the shares per se, but he's got these other preferreds and convertibles that are really going to shake up. And how is that going to affect the US bond market? Like, the bond market's already in trouble, or right around the world's in trouble. Like, who wants to invest in bonds now? Like, I can't think of a worse investment, really. um, But people still do, and financial institutions have to put 40% in their into bonds and stuff. And I think stable coins are going to be another way to sort of stabilize and give I think percent sort of keen to get that stable coin money coming in to buy the US treasuries because nobody's buying them, or not like they were. But is this going to also be a competition to the US bond market with these MicroStrategy instruments, or is it going to be separate thing, or is it going to take money out of that system?
I think eventually, I think the way I would think about it right now, Strategy's issued just over $6 billion of preferred stock.
Hmm.
And 6 billion sounds like a big number for any individual, but for a company, it's small,
So
and relative
small.
to the bond market, it's tiny,
Yeah, yeah, yeah,
right? There's
yeah.
trillions and trillions of dollars in the US bond market. And so it's kind of think about maybe the elephant and a little gnat on the elephant right now. So the
Yep.
bond market isn't particularly worried about the gnat. They might feel it, but they're not really that worried about it. But over time, as strategy is successful in attracting more and more capital, the bond market at some point will not be able to ignore it.
No.
And the rate of money coming out of the bond market and going into investments like these preferreds will accelerate over time.
Mm.
Right now, it's tiny relative to the total bond market.
So nobody's complaining yet. But then we've got all the
Uh,
treasuries, like the Bitcoin treasury, story exploding as well. We've got, I don't know, 160 odd treasury companies, I think last count.
yeah.
And some of them are
Here's
not
a,
going to be
the
good
list.
companies, but yeah. Oh, yeah, brilliant. You've
Yeah,
got that as well. Yeah.
yeah. This is a hundred public Bitcoin treasury companies. Now, not all of them are created equal. The 100th company on here has only 36 Bitcoin.
Yep.
You can see that strategy is head and shoulders above everybody else,
Mm, mm,
with 628, 629,000 Bitcoin now.
mm.
The next largest company has 50,000.
Yeah, which is
Um,
so first mover advantage, and no one's ever going to catch him probably. I mean,
it
CEP
would be very
maybe, but
difficult. And of course, they're
yeah.
not stopping either. They're still acquiring more Bitcoin faster than everybody else is.
Mm-mm.
It's going to be very difficult. Now, think about what happens here, because right now, strategy with about $75 billion of Bitcoin, depending on the Bitcoin price each day, ranks pretty favorably in terms of the largest corporate reserves of money in the world. Berkshire Hathaway in the US has the largest reserve at
Yeah,
about
they're the biggest.
335 billion.
Hmm.
So it's not hard to imagine that strategy over the next year or two actually could approach that level, depending on how Bitcoin performs and how much capital they can attract. And so that also creates some interesting sort of option value for strategy, because now
Yeah.
you're the company with the largest reserve in the world.
Wow.
Berkshire Hathaway has been a very successful business in being a reinsurance company to other reinsurers. They're kind of the umbrella company that helps protect all the insurance companies in the world. And Warren
Wow.
Buffett has done an amazing job with that. And so I wonder what kind of new business opportunities there could be for strategy as they become this largest reserve of assets in the world.
Yeah, and with his way of thinking and his out of the box thinking, what sort of things, strategies he'll come up with could be really interesting. And Berkshire Hathaway, been hugely successful, but now that Warren Buffett stepped down and they're sitting on a melting ice cube uh, of, in a lot of cash and cash equivalent type of investments, they're not doing so well right now, comparatively. So MicroStrategy or strategies going gangbusters. And like you say, if Bitcoin continues to go up higher, then yeah, that could be an interesting future.
I
Do you
think it'll
see
be
any
interesting.
risk? Do you see any risk with strategies being so powerful within the Bitcoin network and owning 4% or I think they, yeah, what was
They
it,
own
3%?
3% of all the
3%.
Bitcoin that will ever be issued. Yeah.
Yeah. Do you see that as being a risk, or bringing in the government's, the strategic Bitcoin reserves or CEP, these massive, powerful companies that could centralize it essentially?
It is something to worry about and think about a little bit. Um, Certainly, if the US gets serious about wanting to acquire a national strategic Bitcoin reserve,
Mm,
per Jason Lowery's recommendation, right, from a national security standpoint, right? You've suddenly got the
yeah,
Department of Defense saying we want this, not
yeah,
not the US Treasury, which is totally different, right? If that's the case, then they may look around and say, okay, how quickly can we acquire this Bitcoin? Where can we get it? and they say, "Oh, here's strategy with over 600,000 Bitcoin. Let's go
Exactly.
get them. Let's nationalize this." So that certainly is a potential. I'm not overly worried about that, but I certainly recognize that as a risk. Now, it's not like the government would take it and not compensate shareholders for it.
Then with what? Cash.
They'd have to pay. They'd have to pay for it.
But they'd have to pay cash. And cash,
Yeah,
of course, is
they'd pay
again, we're
cash, and
back
so
to,
at least you would turn around then and you can reinvest that money back into Bitcoin. So,
but the
you know,
Bitcoin price would go bananas on that very day, right?
probably. Yeah.
Exactly. And then you're left out of the bag, not holding Bitcoin. You're holding cash again, sort of thing. Like I'm just thinking of
Yeah.
worst case scenarios here, but and it's not
It depends on
a
the timing of that. If the US government said, okay, we're going to nationalize strategy and we're going to take the 629,000 Bitcoin they have,
yeah,
Bitcoin price would soar based on that right away. Now the question
yeah,
is, would that price already been locked in, or would the government have to pay what the then current market price is?
yeah.
Right. There's some things that I'm not really sure how that would play out. I don't know that shareholders would be, too badly hurt, but it would be a less than ideal situation.
Yeah, I mean,
Now,
but like they've just taken a part of Intel, because of
yeah,
this the strategic importance of chips, right? So that's a bit of a scary thing to do. And more capital controls are going to happen as we start to get this debt spiraling out of control. Do you believe?
yeah.
I see that happening. We're getting more and more capital controls. Every time I go to the bank, it seems harder to get my own money out, which scares the
In
heck
the
of me.
Intel case, the company kind of needed the government as a partner in order to survive.
Right.
Strategy, it's different than that, right? The government would be coming to strategy and saying, "Hey, we want your Bitcoin," and strategy would say, "Okay, fine, you need to pay us for it." And by the way, the market price just doubled.
Hmm.
Um, so that's one scenario. The other scenario is the government to say, "Hey, strategy, will you be a partner? We recognize the strategic importance of this Bitcoin. You know what? We don't need to acquire it, but we want you to help us and act as a partner and do XYZ for us." So
Yeah.
there's different ways I think that they can partner with the government to ensure that the U.S. has control over enough Bitcoin. Um, the government may not necessarily need to own it outright,
Yep. And I mean,
right?
we're lucky that we've got a pro crypto Bitcoin government at the moment. But if that changes at the next election, do you think they'll be able to roll any of this back, or is it too far gone? Like it's too far developed, and the banking rails coming, and the whole system's changing in the next 2 to 3 years massively. Wall Street coming in, everything, the biggest banks in the world coming into Bitcoin and crypto. Do you think it's too far for them to backtrack any of it?
I think it becomes more and more difficult the more Bitcoin gets embedded into everything.
Yeah.
The other thing too I find interesting is that in the last election, I think the Bitcoin community provided backing to, I think it was 45 politicians, both
Yep.
Republicans and Democrats, and all of them won their seats.
Wow.
So
Yeah.
the Bitcoin community did a nice job of putting people in positions of power in both parties.
Yeah. And the Democrats sort of ran on the negative crypto Elizabeth Warren type of choke point 2.0 policies, and that didn't go well.
Right.
And put them offside. But it'll be interesting to see how that unfolds. Is there anything else, soon before we wrap up this session on Bitcoin that, before we get too much in the weeds, because I could talk to you for hours on deep stuff.
You
But
know,
yeah, anything that we need
the
to
one
take
thing is this,
time
and we
before.
talked about this earlier, but just to maybe put a little finer point on this,
Hmm.
um, you know, if you have capital, right, we know we need to invest that capital to preserve its purchasing power. And we talked about beating inflation, but we also talked about debasement and how that's even a higher hurdle. But there's a further risks than that. And this is a nice list from Michael Saylor, right? If you're a company, you've got tariffs and tolls and torts. You've got the risk of lawsuits, right? You've got insurance and storage and licensing and taxes and capital gains and all these different things you've got to figure out. If you're an individual, you've got, inheritance and gifts and property taxes, right? If you're a company, you've got competition, you've got to worry about the weather, you've got to worry about crime and regulation and all this stuff, politics, right? And so it's a very hostile environment for
Yeah,
capital out there,
yeah,
right? Particularly as you try to protect capital over a long period of time.
Mm.
And so this is a nice chart from Michael Saylor. And actually, I'm sorry, let me just go back to this real quick. He's come up with what he calls the first law of money. And I think this is an interesting way to think about this. The lifespan of an asset is equal to the value of the asset divided by its maintenance cost.
Hmm.
Okay. So we're not looking at returns. We're just looking at the life cycle, how much you pay for it versus the maintenance cost. So he runs through some examples here. If you have a Ferrari, he calculates that the life cycle of a Ferrari is like 5 years,
Yeah, never buy a Ferrari.
right? You
Looking
don't
at
buy
that.
it, you don't buy it as a store value. Now there might be some Ferraris that hold their value, but
Yeah.
there's the cost of maintaining it.
Yeah.
For a yacht, it's like 6 years. For home, it's like 17 years.
Wow.
For silver, 22. For a warehouse that earns money, it's like 40 years. For gold, it's like 62 because you've got
Mhm.
storage costs and all this stuff. For a painting, right, a master, it might be 72 years. For land, it might be 91. The oldest ranch in the United States is the King Ranch, 173 years. And then Crown Estate in England, 1,000-year dynasty. Again,
Mhm.
not without some risks and some challenges that they've been through.
No, no, and we all can't have one of those.
Right. Pretty tough, right?
Yeah.
So the thing is that he says entropy dilutes the value of physical assets, right?
Yeah.
The natural state of physical assets is decline,
Hmm.
right? And so the challenge that you have is, again, all these things that we talked about, um, and you want to find then an asset that can protect you against that. And so he's saying that Bitcoin, depending on how you hold it, could be 1,000 to 100,000 year asset,
Wow.
right?
Even
And
with
so,
quantum computing, like because we didn't talk about quantum computing because people are going, oh, they're going to crack the code and then the algorithm will be broken and the cryptography will be broken and then it's all over. What do you say to that?
well, remember that chart that we had of the 1 quadrillion assets in the world,
Yeah.
right? Here, I'll take this off. And so Bitcoin right now at 2 trillion, it's 0.2% of all the world's assets. If I was developing a quantum computer and if I had nefarious intentions, I wouldn't be going after the 0.2% of assets. I'd be going after the biggest slice of the pie I could get, right? That might be cash in banks, it might be bonds, it might be whatever. I
Nuclear
wouldn't worry
codes.
about I wouldn't worry about well, so that there too. So nuclear codes, if I got those, then I could control all the world's assets,
Exactly. So we're all buggered
right?
then in that
So
case.
Bitcoin would not be the first target, I guess is the point I'm trying to make.
Yeah.
Right? There's other probably easier targets and more important targets to go after than going after Bitcoin. The other thing that's important to say is Bitcoin can be steps can be taken to make it more quantum proof. And basically every other asset in the world would also need to take similar steps to protect it. Your bank would need to take steps to make themselves quantum proof.
Exactly.
So this is an issue for everything.
Yeah, so this is a non-argument, really. I mean, it's quantum computing itself is a threat to humanity, really,
Yep.
right across the board, not particular to Bitcoin. So just putting it in that
Right.
perspective, where people think that it's going. What about the fact that, because another one that I get chucked at me, there could be an EMF attack, like that's going to wipe out all the computers right around the world, and then what happens to your Bitcoin? What do you say to that one?
Well, what happens to all of your assets? Your financial assets are in a bank's computer. Those are history.
Yeah, your whole
Um,
computers go down, everything in civilized society goes down.
that's right.
And we've got one on the space station, by the way. So, we probably still have that ledger there. And,
Yeah.
so we'd probably be able to resurrect that if that was the case.
We've
Um,
got bigger issues if we have those kinds of things. By the way,
yeah,
the real estate records of who owns what, that's all history,
yep.
right? A lot of the stuff would be compromised. Again, it's not a problem that's unique to Bitcoin.
That's really just wanted to clarify that one because that's another one that gets chucked at you sort of randomly.
Yeah.
And it's not,
Now,
it's digital. They can't see it, they can't feel it, they can't grab it. It's not a piece of gold, it's not a piece of paper even. But then nothing is like, what is a piece of paper? That was originally a promissory note backed by gold. Now it's not
yeah,
backed by gold. It's backed by what? The authority of your government Do the governments around the world operate efficiently? Do they operate without malice? Do they operate without nefarious intent? Do they line their own pockets? Like all of these are questions that need to be asked because you've got state-backed problems, like when it is state-backed. And if you look back at the monetary history and go back to, the Bank of England and the First World War, and that's when it actually sort of started coming off the gold standard and not giving their citizens back their gold when they wanted it, and then it's progressed. And then in the 30s, of course, the government famously in America took all the gold. And then in 1971, we had Nixon take us off the gold standard because they actually couldn't
Oh,
pay the gold back. So this is state um, backed fraud, basically. State backed. So
that's right.
but they set the laws so they can do whatever they like, right? And central banks.
Yeah. And
uh,
I
um,
think that back to your earlier question, I think we're going to find ourselves kind of in two parallel systems.
mm,
I don't see us exiting the fiat money world anytime soon. Governments are going to want to hold on to that privilege as long as they can.
yep.
They're right, basically, essentially, as long as we allow them to hold on to it. But if more and more people take their store of value assets and put it into something like Bitcoin and out of the government's hands, decentralized, that is going to probably force a lot of change over time. But until then, I think we're going to be stuck with a fiat money system. The challenge for individuals, I think, will be to keep as little money as you can in that system.
Yeah, that's I mean that's what I'm trying to work out now is how can I operate outside of the system with most of my money, but still having you need cash to buy your coffee and your groceries and pay your bills, right? So you need to have this sort of parallel system, and there are people working on it, and a lot of that technology is beyond me at the moment to understand how do I actually operate like that. But that's what I'm heading towards. That's what I'm trying to achieve so that I live, like Jeff Booth says, you think of everything in the Bitcoin sort of world and the
Yeah.
Bitcoin standard, not as in a comparison. Just as a last question before we wrap up soon is CBDCs. A lot of people don't won't who aren't in our space, who don't understand, who haven't been studying it as deeply. They'll hear about digital money coming and digital central bank digital currencies, and they won't call them central bank digital currencies probably even. This is a Trojan horse. This is as James from Invest Answers called it, the Orwellian spy coin. Without what is the difference? Like for the person who's like not understanding all of this space, like what is the difference between Bitcoin and CBDCs, or indeed stable coins and CBDCs? Why am I like I'm totally against CBDCs because they control what you can do with your money and tell you, are you a good citizen? We just went through the pandemic a few years ago. I was a bad citizen because I didn't get something that everyone else we were told to get.
Yeah.
Therefore, in a world of CBDCs, and they did this to the truckers in Canada, debank them, stop them getting access to their funds and so on. So this is not far-fetched. They can say you have no more money because you didn't follow the rules of society as
That's
we
right.
state it.
Yeah.
So yeah, what are your thoughts on CBDCs and how do we combat?
And here's the way I think about it. Let's assume for a minute that everybody we're listening to your show is a law-abiding citizen and they have no reason to hide anything from the government. Okay.
Mhm.
Do you want the government having the ability to read all of your emails?
No,
Most people would say, no, I don't have anything to hide, but I don't really want any government official looking at my emails.
why should they? Yeah.
Right. And some people may say, well, you know what? I don't want them to, but you know what? They probably have access if they want to, so I can't stop it. Fine. Do you want the government eavesdropping on your conversations in your living room in your house at night?
Mm.
And I think everybody would say no. That crosses the line for me. I don't want that. So when you think about digital currency that's issued by the government, they essentially then can track every dollar that you spend and where you spent it. Now, you may say on the surface, well, I have nothing to hide. I'm not doing anything crazy. I'm just going to the grocery store. I'm just doing this and that. But you know what? What happens if they decide that they don't like the way you're spending your money for some reason? You're
Mm.
not eating healthy enough,
Yeah.
right? Or you're spending too much money on alcohol, or you're spending too much money on wasteful clothing that's, whatever the issue is that comes up in the future. Do
They
you
can
really want
stop you.
somebody from the government passing judgment on the way you live your life and the way you spend your money? That's the ultimate risk with central bank digital currencies is that they now have control because they have visibility into how you're spending your money. Therefore, they at some point could control what you do with your money.
Yeah,
And they may say, hey, Lisa, we're going to tax you more because you're spending money in ways that we don't like,
exactly. Yep.
right?
They can control everything you do then. That's a
Yeah,
dystopian future possibility. And I mean, they do that in China already. You have the good citizen sort of stack of how
yeah,
good you are and how much you get. And, and we might think, well, we're not like that. We're a democracy. Are we? Are we a free market? Are we a democracy? I've experienced other sides of that debate.
right,
And if you listen to Jeff Booth, we're not a free market. We never have been
right. Never
100%.
have been.
Never have been.
Yeah,
And Bitcoin is the only first free market, full 100% money that is absolutely free market. Soon I'm going to have to rush off, but I'm just so stoked. This was excellent, and thank you so much for putting that wonderful presentation together because I think it's going to walk people through this journey because you've spent years studying this and to explain it to trying to get it across to people that you love or that you want to for them to entertain this, understand it, to research it. This was a brilliant presentation. So thank you so much for your work. And I'm really looking forward to our next session, which is even going to be even more exciting.
yeah, I'm looking forward to that one too, Lisa, because I think that we can use today as kind of a building block
Yeah,
to help us understand the changes that may be coming in the future and why something like Bitcoin is important. But even far beyond that, even if Bitcoin's not part of the equation, the future that's coming at us is exciting and scary at the same time. It's two sides of the same coin.
yeah,
And I think the more people can understand what's coming, the better off they'll be. They can help maybe prepare themselves a little bit more for it. I
yep.
don't have all the answers, but I think people will find it to be very interesting in terms of what's going to come in the next 5 and 10 years.
Yeah, the
Uh,
exponential change that's upon
yeah,
us, and the opportunity that presents, the dangers it presents, and that whole deep dive. And you just don't want to be sideswiped because you didn't see it coming because you didn't know about it. That's the thing, and understanding and prepping for that in a positive, optimistic manner, hopefully. But
yep.
that's what next session is going to be about. So do stay tuned for that. Soon, just want to thank you. You're absolutely brilliant. I'm so glad we've managed to catch up today. Thank you so much.
Fantastic, Lisa. Thank you very much.
And make sure you follow Cern. What's your Twitter handle?
Just at Cern Basher.
At Cern Basher and the website, and we'll put it in the show notes as well. But your brilliant advice website.
Yeah, and just to mention to people if they're interested in working with us, we can only work with people that are have their money in the United States, unfortunately.
Great.
But it's brilliantadvice.net for those that are interested.
Yeah, we've got a big audience in the States. So yeah, make sure you check it out if you're in the States. Cern, thank you so much for your time today. It's been
Thank
brilliant.
you, Lisa. Really enjoyed it.